Hey everyone, Albert Stepniak, your friendly real estate agent here. And let's start with something really important that came out this week, the Federal Reserve's latest meeting. I know the headlines can sometimes sound a little complicated, but the main takeaway is pretty simple. The Fed decided to keep interest rates right where they are. For the fifth time this year, the Fed's key short-term interest rate is staying unchanged at about 4.25 to 4.5%. Now, you might hear people asking why they're not lowering rates, especially with some folks pushing for it, right? But the Fed has a different job than just making loans cheaper. Their main focus is to keep the economy stable, which means they're always watching for inflation and how things like recent tariffs might impact the cost of goods for all of us. They want to see what happens with those things before they make a big move. It's an interesting balancing act. The government just announced that the economy grew at an annual rate of 3%, almost 3% in the second quarter. That's a great number, especially after the economy shrank a bit in the first 3 months of the year. When you average those two quarters together, it shows our economy grew by about 1.2% in the first half of this year, which is a solid, steady pace. The Fed's job is to use interest rates to either slow down or speed up growth, not just to reward a strong economy. They'll keep rates steady if they think things are in a good place. Now, how does this affect you in your dreams of buying or selling a home? Well, the Fed's decision doesn't directly set our mortgage rates, but it does have an influence. When the Fed keeps its rates steady, it generally encourages lenders to keep mortgage rates in the current range. If you have an adjustable rate mortgage or an ARM, then the Fed's decision might have more direct impact. Now, speaking of mortgage rates, I've got a little update that might bring a tiny bit of good news to prospective home buyers out there. The average rate on a 30-year fixed mortgage just slid down a bit this week to 6.72% from 6.74% last week. That's actually back to where rates were about 3 weeks ago. And if you're looking at a 15-year fixed rate mortgage, those rates also dropped to 5.85% from 5.87% last week. The big picture here is that the Fed is staying cautious and letting the economy find its footing. This could be seen as a good thing because it brings a bit of a predictability to the market. You'll know that we are likely to see a period of stability in mortgage rates for a little while, which helps you plan your home buying budget with more confidence. If you have any questions about how this news might impact your specific situation, please don't hesitate to reach out. I'm here to help you navigate it all. Now, I got some interesting news to share from Fannie Mae, one of the big players in the mortgage world. They've just released their updated forecast for what's coming next in the housing market. And it looks like we might see some more stability on the horizon. Fannie Mae's latest report, which just came out in July 2025, is actually predicting slightly lower mortgage rates and slower home price growth through 2026. This is a subtle but positive shift from what they were forecasting last month. Specifically, they now expect the average 30-year fixed mortgage rate to end 2025 at about 6.4% and then potentially drop further to 6% by the end of 2026. That's a tiny bit better than their previous predictions, which is always welcome news for anyone looking to buy. When it comes to home prices, Fannie Mae is also adjusting their outlook. They're now projecting annual home price growth to be around 2.8% for 2025 and then even slower at 1.1% for 2026. This is downward revision from what they previously thought, which means we might see home prices moderate more than initially expected. This shift towards lower price growth can be a real benefit for buyers as it might make homes feel a bit more accessible. Now, what about overall home sales? Fannie Mae is forecasting a modest increase in total home sales. They expect to see about 4.85 million homes sold in 2025, and then that number is projected to climb to 5.35 million units in 2026. This suggests a gradual recovery in sales activity, which is a good sign for the overall health of the market. So, what does all this mean for you, whether you're a buyer or a seller? It suggests a market that's becoming more predictable and potentially more balanced. For buyers, slightly lower rates and slower price growth could create more opportunities and make your homeownership dreams feel a bit more within reach. For sellers, means understanding that while prices are still growing, it's at a more moderate pace, and having professional guidance to price your home correctly will be key. Overall, this outlook from Fannie Mae points to a housing market that's slowly but surely working towards greater stability. If you have any questions about these forecasts or how they might impact your specific real estate plans, don't hesitate to reach out. One more thing that could change how some folks qualify for a mortgage. So Fannie Mae and Freddie Mac may start looking at a home buyer's cryptocurrency holdings as a real estate asset when they decide a mortgage is a good risk. It's a pretty big deal because before now, banks pretty much only cared about your crypto if you sold it and then converted it into regular dollars. Now, the new rule says you don't have to sell your crypto to have it count. There's a catch though. The crypto has to be held on a US regulated exchange. Experts are saying this is a win for people who see crypto as a serious investment, similar to stocks. Could mean more people who have a lot of their money in crypto might now be able to qualify for a home loan. Of course, just like with stocks, lenders will probably be cautious and might not count the full value of your crypto because it can be pretty volatile. But still, it's a step toward making it easier for a wider group of people to buy a home. Right now, the housing market has been a bit slow with high interest rates and home prices keeping a lot of people from buying. This new policy is meant to help with that by expanding the way banks look at the person's assets, could bring more buyers into the market. It's a way of recognizing that how people invest their money has changed, and it might just help a few more people finally get the keys to their new home. Remember, always check with your lender for the details and latest updates. But what's going on in our local market? I'm talking about Palm Beach County, for example. For single-family homes in Palm Beach County this June, we saw a noticeable slowdown compared to last year. The number of closed sales was down by about 6.5%, with 1,187 homes sold this year versus 1,269 last year. We also saw a significant drop in cash transactions, which were down over 11%. The median sale price has softened, decreasing by 5.2% to $626,000 from nearly $660,000. Sellers are also getting a little less of their original asking price at 93.1% compared to 94.6% last year. Homes are taking longer to sell, with the median days to contract increasing by 20% to 42 days. On the bright side for buyers, there's a lot more to choose from. The number of active listings has increased by over 21%, bringing our total inventory to 6,259 homes. This has pushed the month's supply of inventory up by almost 27% to 5.7 months. The townhouse and condo market is following a similar trend. Closed sales were down about 5.4%, and cash transactions decreased by nearly 11%. The median sale price dropped to $315,000, a 3.1% decrease. Sellers are getting a bit less of their original list price, now at 90.9%. The time it takes to sell these properties has increased even more dramatically than for single-family homes, with the median days to contract jumping by over 32% to 61 days. Just like with single-family homes, the number of listings has grown substantially, up by 17.6% to 6,670 active listings. This means the month's supply of inventory at townhouses and condos is now at 9.7 months, a significant increase of nearly 37% compared to last year. This was Palm Beach County, and overall, Florida is still one of the biggest magnets for movers in 2025. You know, America has always been about people moving to new places, looking for new opportunities and a fresh start. That spirit is alive and well today, and while the Wild West might be tamed, the desire to relocate is still super strong for many homeowners. And when it comes to picking a new place to call home, Florida continues to be a top destination, outshining many other regions across the country. So how do we know this? The simplest way is to look at something called net migration data from the US Census Bureau. This basically tracks how many people are moving into a state versus how many people are moving out. The latest numbers paint a really interesting picture. While the US population grew by about 1% overall, Florida added a whopping 467,300 newcomers in the past year, for which data is available. That's a 2% increase in our population, which is significantly above national average for states. Now, Florida isn't the only state seeing a huge influx. Texas is actually leading the pack in total new residents, adding over 500,000 people. And it saw the largest increase in people moving from other parts of the US compared to any other state. We also see neighboring South Carolina and North Carolina doing pretty well. South Carolina in particular has a unique story. A very high proportion of its new residents are coming from other states, which is quite impressive for its size. And North Carolina also saw a big increase in new residents, ranking fourth overall in net migration. So we know where people are moving, but let's talk about who these movers are and why they're choosing places like Florida. When you look at who, there are three big groups to consider. First, millennials, who are now in their late 20s to mid 40s, are making up a huge chunk of movers, especially to places like Texas and North Carolina. Then there are the baby boomers. They continue to flock to Florida, as we know, often looking for retirement spots, but they're also increasingly choosing South Carolina. And finally, we have a significant number of international migrants choosing Florida and Texas, especially in our bigger cities and counties, like right here in Palm Beach County, for example. What's driving all this popularity? One of the biggest reasons is housing affordability. Compared to places like California and New York, where property prices and rents have truly skyrocketed, states like Florida and Texas offer a more accessible entry point to homeownership. People are looking for places where their money goes further. Then there's job growth. Texas, for instance, has a rapidly expanding tech sector that's creating tons of new jobs. Here in Florida, our job market is still robust, particularly in growing sectors like healthcare and technology. Combine that with favorable tax systems, both Florida and Texas have no individual income tax, which is a huge draw for people from higher tax states. And of course, there's the climate. It's no surprise that southern states are so popular. Warmer weather pretty much year-round is a dream for many, especially compared to the harsher winters in more northern states. Last but not least, the continued appeal of remote working is a big factor. With more people able to work from anywhere, they have the flexibility to choose where they live, even if they're staying with their current company. This gives movers so much more freedom to pick a location that truly fits their lifestyle, not just their office commute. The bottom line is that 2025 is expected to see continued growth in migration for Florida and these other popular states. While Texas remains a standout, Florida is similarly charmed, and the Carolinas are definitely worth keeping an eye on. This strong trend for our state is a fantastic sign for the real estate market here in, for example, Palm Beach County. More people moving in means continued demand for homes, a thriving economy, and a vibrant community. If you're considering a move to our beautiful state, or if you're already here and want to know more about how this growth impacts your home's value, feel free to reach out. I'm always here to help. Now let's dive into a fascinating part of our market, the luxury real estate segment. You might hear about general economic uncertainty or the real estate market cooling down in some areas. But I'm here to tell you that the high-end market, especially for homes priced above $10 million, is actually getting stronger than ever in 2025. One of the big reasons for this strength is that all cash deals have become the norm in the luxury sector. With interest rates being higher, wealthy buyers are often just paying cash, which avoids those higher borrowing costs. These buyers are also looking for turnkey properties, homes that are absolutely move-in ready and perfect, often with smart price adjustments already made. There is a big demand for new construction and homes where you don't have to do a thing. And because there is still a limited number of these top tier properties, we're seeing competitive bidding wars pop up. Experts also suggest that recent ups and downs in the stock market have made more investors see real estate as a super stable and tangible asset. Sometimes something you can really touch and feel. We're also seeing a rising international interest in luxury homes, partly fueled by a special visa program that offers a path to U.S. citizenship. Our very own South Florida, along with communities in Los Angeles, has been home to some of the priciest luxury sales this year. Now, here's where it gets really interesting. What do today's luxury buyers really want? It's no longer just about the biggest house or the most expensive finishes. According to the report called Luxury Unfiltered, modern luxury, it's all about authenticity, meaning, and values-driven experiences. It's about an emotional connection, about how a home reflects who you are, your purpose, and what you truly believe in. The research challenges us in real estate to look beyond just price tags or prestige. Luxury used to be just about wealth and exclusivity, but now it's about the emotional connection, identity, and values. It's not just what people buy, but what those purchases represent about them, especially for younger luxury consumers, millennials and Gen Z. They want to feel something when they engage with a luxury brand. They're looking for stories that connect with their personal identity, and they demand transparency and authenticity. They want a brand to reflect their beliefs, not just their bank accounts. So, how are we in real estate responding to this shift? We are evolving quickly. Gone are the days when a fancy logo or a high price tag was enough. We have to build emotional connections and trust. In luxury real estate, this means we're focusing on more than just lavish amenities or square footage. It's about how a home truly fits into the buyer's unique lifestyle and values. We're seeing a huge demand for customization, sustainability, incredible craftsmanship, and homes with a strong story behind them. A luxury home now needs to feel like an extension of the buyer's aspirations, whether it's through personalized service, sense of exclusivity, or compelling storytelling about the property. For luxury developers, This means understanding what truly matters to clients, be it peace of mind, environmental responsibility, community, or prestige, and weaving that into every part of the buying experience. Younger generations like millennials and Gen Z are really driving this transformation. They don't just want to own luxury, they want to believe in it. They care deeply about where products come from, how they're made, and if they align with the bigger issues like climate change or social fairness. And because they are so digitally savvy, they expect fast, personalized, and meaningful communication from us. They're like curators of lifestyle and identity. So we need to speak their language, often online, and engaged in two-way conversations as they expect both exclusivity and accessibility. Digital transformation is huge here. It's not just about virtual showrooms anymore. It's about telling a story in the digital space that feels as premium and emotionally rich as an in-person visit. Virtual tour is no longer just 3D renderings. It's about telling a story of who lives in that space, what their life looks like, and what emotions the home evokes. Technology has become a tool for deepening connection, not replacing it. And sustainability is now a non-negotiable feature for many affluent consumers. Buyers want brands to be accountable for their environmental and social impact. In fact, building in sustainability can actually elevate the perception of luxury, signaling responsibility, craftsmanship, and forward-thinking design. We are talking about energy-efficient construction, sustainable materials, and homes that feel like they're good for the planet. This means telling a story about environmental stewardship that truly aligns with the client's values. Even heritage is being reinterpreted. While innovation is crucial, there is still a strong appeal in craftsmanship and tradition, especially for those who appreciate artistry. Successful luxury brands are blending their rich histories with modern relevance. Think classic architectural details combined with cutting-edge smart home technology, or artisanal materials offered with customization options. Finally, while higher prices still matter, price alone no longer defines luxury. Exclusivity and scarcity are still important, but buyers are now focused on overall value, which includes emotional, functional, and ethical value. High price now must be justified by the product, the story behind it, the impeccable service surrounding it, and the identity that it helps the buyer project. Some luxury brands are even offering entry-level luxury items to attract younger, aspirational customers who might not be wealthy now, but could become loyal, long-term clients. The key takeaway for real estate developers and agents like me is clear. We have to evolve. It's no longer enough to just show off granite countertops and huge layouts. We need to build emotional journeys for our clients, create memorable moments during the buying process, and tell really compelling stories around our properties. We must integrate digital tools smartly and build trust through transparency, showing that our properties aren't just luxurious, but also meaningful. These shifts aren't a crisis. They're an incredible opportunity to build deeper relationships, attract new clients, and redefine success in a more human, connected, and lasting way. But let's face it, not everyone has millions of dollars to buy a luxury property. So let's talk about something really important that's on a lot of people's minds. Rental costs here in Florida. A new study just came out from the University of Florida that gives us a really good look at the state of our rental market. And the big takeaway is that a lot of our low-income neighbors are struggling. The report estimates that nearly 1 million low-income households in Florida are cost burdened. What that means is they're paying more than 40% of their income just for rent. And that can make it really tough to cover other essential like food, transportation, and healthcare. This is a huge issue that affects people all across the state, with most of these families living in our most populated counties, including right here in Palm Beach County. So why is this happening? Well, the study found that Florida's massive population growth is a big part of the reason. We've added more than 1 million new households in just the last few years, with a lot of people moving in from places like New York and California. Even though we've added a lot of new apartments, the demand is so high that the median rent has jumped by nearly $500 per month statewide. And here in Delray Beach, some reports show the average rent for an apartment is about $2,386 per month for one bedroom, and for a two-bedroom, it's around $2,879. That's a significant amount of money and a big reason why so many people are feeling the pinch. The report also found some other interesting things. For example, most of these renters who are struggling with the costs are working. Nearly 80% of renters' households have at least one adult who's employed. This isn't just an issue for people who aren't working. It's a real struggle for our workforce. The study also pointed out that homelessness is on the rise in Florida, and unfortunately, things like hurricanes and tight housing markets are making it even harder for families to find stable housing. So, what are the solutions? The study highlights the critical role of publicly assisted housing. Right now, there are over 314,000 affordable rental units statewide that have been funded by programs from the Florida Housing Finance Corporation, HUD, and other groups. The study helps these policymakers figure out where to put money or create and preserve these affordable homes. For instance, in Delray Beach, a new project is being built with 386 apartments where 40% of the units will be affordable for people making up to 140% of the area's median income. It's a start, but we know we have a lot more work to do, especially since a lot of our existing affordable housing could lose its protections in the next decade. If you're a renter looking for options or a homeowner who wants to understand how these trends affect our community, please reach out. I'm here to help you navigate this changing market. Now let's talk about a fascinating trend that's really gaining traction, especially among younger generations, and it has a huge impact on their dreams of homeownership. It's called revenge savings. You might remember the phrase revenge spending from after the pandemic when people were eager to get out and splurge. Well, now many Americans, particularly millennials and Gen Z, are doing the opposite. They are aggressively saving money to rebuild their financial control. This is a smart move, especially with current interest rates and the overall economic uncertainty we've been seeing. While historically these generations might have saved a bit less than previous ones, they're now really stepping up their game. One big way you're seeing this trend play out is through challenges like No Buy 2025 that have become super popular on social media. People are seriously cutting back on spending beyond the absolute essentials. Their goal? To limit overspending and save more money, often with big goals in mind, like buying a home or making another large purchase. It's truly inspiring to see how focused they are. And it makes perfect sense why saving for a down payment is such a big deal for them. A recent study by the National Association of Realtors found that a significant number of millennials, about 20%, and an even larger portion of Gen Z, around 33%, feel that saving for a down payment is the absolute hardest part of the home buying process. So they are tackling their challenge head on with revenge saving. How are they doing it? They're getting savvy with budgeting apps to track every dollar. They're canceling unused subscriptions, those monthly charges that quietly add up. Many are setting up automatic monthly savings transfers so they pay themselves first. And they are choosing lower cost activities for fun, being mindful about every dollar. To make sure their hard earned money grows, they're putting funds into smart places like certificates of deposit, CDs, and high yield savings accounts. Right now, for example, you can find high yield savings accounts offering over 4% annual percentage yield, and CDs offering even higher rates for short terms, some above 4% as well. That's a lot better than the regular checking account. For me, as a real estate agent, this revenge saving trend is incredibly exciting. It means we are seeing a generation of future home buyers who are financially disciplined and actively working towards their dreams. I personally recommend reading Darren Hardy's bestseller, The Compound Effect. It explains a lot. So, if you're one of those determined savers, know that your hard work is going to pay off, bringing you closer to finding your perfect home here in Florida or whatever your real estate dreams take you. Keep up the great work, and when you're ready to make that move, I'm here to help you turn those savings into a set of keys. So to recap, we've covered the latest housing market trends, the impact of recent interest rate changes, and what it means for you as a buyer or seller in Florida. My goal is to keep you informed so you can make the best decisions for your future. If you have any questions or want to discuss your specific real estate goals, don't hesitate to reach out. All my contact information is in the description below, and I'd love to hear from you. Thanks for watching, and I'll see you in the next video.